Hello and welcome to Super Profit Club. This is a video brought to you by Super Profit Club. Super Profit Club is a community of like-minded traders wherein we come together, and the mission of Super Profit Club is to help 1 lakh traders become financially free. So through these videos that we bring to you through the Super Profit Club channel, these are aimed at providing you learning and lessons into the swing trading so that you can learn through these lessons and apply these lessons to your trading and become more profitable. And if you're already losing money in the stock market, then apply these concepts so that you do not lose money and instead you start earning money. Now, whatever we share here, these are from my personal experience and the views and opinions. And here, do not consider it as any investment or trading advice. Even if we go through the examples, do your own analysis and then only apply these. Okay, so this video is for the purely educational purposes, so I welcome you. And if you like this video, just like, subscribe and share it with your friends so that they can also benefit from it. Okay, so let's jump into some learning. Okay, so what I'm going to cover in today's video is the entry price range. Okay, entry limits, or when should you enter a particular trade, right? So, let me tell you a bit about the swing trading. So, a lot of people, many times I get this question from my students when they're starting on what exactly is swing trading, right? While this concept has been there for many years, right? There are not many people who are teaching swing trading in the pure sense, actually. Okay. So swing trading, basically, I learned from my mentor who was in Australia, and what I use is the Gann techniques. So W.D. Gann, William Dilbert Gann, he traded in the stock market from 1905 to 1955, about 50 years in the stock market, and he's believed to have be the one of the most successful traders. And I use his techniques, right? And he used swings, to trade. So typically, if you see, what happens is that in the stock market, in every share, in every market, whether it be currency, commodity, futures, and you can apply this to any, any kind of thing that can be traded in the stock market, or in the commodities market or the forex market, right? So basically, you would see that there are swings happening in the market all the time. So the stock goes up and then it comes down, it goes up again and then it comes down, right? So typically, these swings keep happening, and if you look at the stock, right, a particular stock or market, if you follow that for a period, you'd be able to see that there's a typical pattern of these swings that are being made. Okay, so basis my experience, what I've seen is that over these typical swings are somewhere around 6 to 8%, sometimes 10%. They will even go to 15%, right? One swing. So when I say swing, it could be in any direction. So this swing could be, an upswing, or it could be a downswing, and you can trade both ways, right? Depending on what your experience is, how long you've been trading, and if you're comfortable with short trading, right? So these are the swings happen on both ways, right? So and as the market continuously moves up, that's called an upswing, and when it continuously goes down, it's called downswing, right? And that's how you learn swing trading, actually, right? And the main thing in the swing trading is to identify the swing as it is forming, right? As if it was a downswing that was there, so when is an upswing starting? That is what you have to understand. Okay. So if you look at, right, so typically the way people enter a trade, how does it happen? They get a tip from somewhere, they get to know from somewhere that this share is going to go up. That could be one way. The other one could be that the maybe you've seen a stock which is already going up for many days, so you say, okay, this is going up and it is going to go for more days in, right? So let me jump in and I'll also get money out of it. Okay, now when you do that, the first one is still okay, right? That's how typically people get in. Okay, they don't really know what is the buying range or limit, or when should they enter a trade, right? So what you should do is, a lot of people, what I've seen that they enter when the swing is almost coming to an end. Okay, when the swing is almost coming to an end, when it has been going up for many days, right? Rather, what you should do is, you should always get into a trade or a swing when it's starting to form. Okay, when it's starting to form, and it is always good to enter within the first 1 or 2 days when the swing starts. Okay, and then that's how you do the swing trading. Okay. Now in swing trading, so swings, how do you identify swings? That could be a question, right? So the way the question you can answer is, typically, and I'm giving you this thing, that the swings are roughly 6 to 8%, 10% at times, right? Mostly that is the kind of swings that you'll see, and these last for about 6 to 7 days. Okay, so when you're seeing the stock going up for 5-6 days, right, then you should, in your mind, should know कि yes, that could be a time when it is going to come to an end. Okay, that swing might be ending anytime. Okay, and then you keep looking when it is for the first day, it is in the downswing. Okay, that is when you should get ready, and you should see that is it getting into the upswing next day or day after that. That will be the time when you should get in, right? So now how do you decide your entry range or enter this thing? So typically the way you should look at it is that you should look at the previous swing in the same direction that it happened, and just enter by about 1/4 of the price of this, right? And in that swing. Okay, obviously there are some techniques, the way the calculations have to be done, but here you first understand the concept, right? So let's say the previous range was 10 rupees, for example. So always what I will do is, when the new swing is starting, right? So let's say the previous swing was 10 rupees, and right now the current market price is, when it is coming down, it came down to 100 rupees, for example, right? So what I would do is, now I will try and get in by 102.50, okay, which is 25%. So what it will do is, because I am expecting the market to go up by about 10 rupees again, so I still have a headroom for about those 7-8 rupees, right? So if you get in by 102, 102.5, that should be your entry range. Okay, if it crosses that, then usually you should leave it alone. Okay, why? Because it's just like a train platform. Okay, you only take the train from a platform, you don't take the train from when it has not come to the platform. Okay, and if it is left the platform, just leave, you don't get into the train, right? You leave it, you don't run after the train. So follow that principle, get in within 1 or 2 days when the swing is starting again, right? And what you should do is that also enter within the roughly 20-25% of the previous range, right? So that you've got a lot of headroom available. If you follow this principle, you will earn a lot of money, right? So that should be your entry limit, entry range that you should keep. Okay, I'm going to get in between this and this, and that is what I'm going to get out or exit out of this particular thing at the time. Now obviously for learning what your exit target should be, what the stop loss should be, what risk etc you should be taking, there are many videos in Super Profit Club which you should go through and learn more about it, right? Okay, so I wish you all the best. If you like this video, just like, subscribe and share this. And to learn more about how you can identify swings, what kind of swings could be there, what your entry prices etc could be, to learn more about that, and what your reward to risk ratio and other techniques for the stock market, why don't you join me for one of my webinars by clicking the link which is given in the description below, and you can come to one of the webinars, and there I take you through the entire system which is there. However, keep coming back to this channel to learn about more videos, right? Because I cover the entire concept here. I give you and in these videos all of that is covered. So I wish you all the best and happy trading. Just learn these lessons and implement these. This could be very, very useful for you.